XRP and the rest of the cryptocurrency market took a little bit of a hit after yesterday's remarks from Jerome Powell and the Federal Reserve here in the United States. In today's video, we're going to talk about why we should not be worried when it comes to the 1 month, 2 month, and even rest of the year outlook for XRP and the rest of the cryptocurrency market. But remember, as always, never financial advice, just trying to put you guys on the plays that I'm in. If you're new around here, smash the like button for the YouTube algorithm to get this video out to more people, and also consider subscribing to the channel. I'm currently on the road and traveling, so therefore I am not in my typical setup. I'm actually using my laptop, and you guys will see the camera quality is so poor that I decided it's better off if we just do the audio. Let's go ahead and dive in. Market is looking still really strong, in my opinion. After Jerome Powell kind of came in hot, a lot more hawkish than a lot of people were expecting. But Bitcoin holding above 118K today, about 24 hours since FOMC yesterday. Ethereum 3784 and XRP at 309. What I love though for XRP guys is when we look at the moving averages here from small or lower time frames, the 5, 10, and 20-day moving average, XRP is actually still looking exceptional. Really strong price action, really good holding up from where it actually was broken when it first broke its intra-year high back in January. And we saw it rally from November through January, and then we retraced. We thought, hey, could we go back to the support that we were at beginning of November? But the answer was no. We found a stronger level of support, and now we have bounced off of it as we have expectations for the crypto market that are extremely bullish. So with that being said, right now is not the time to panic sell. We are still very early when it comes to the early cycle and mid-cycle scenario. And of course, Bitcoin is still dominating quite well, but we're expecting liquidity to flow into alts as risk on assets begin to move. Now, what's interesting is we need to make sure we highlight some of the things that happened yesterday during FOMC. First off, Donald Trump blasts Jerome Powell after the Federal Reserve votes to keep interest rates steady. President Trump blasted the Federal Reserve Chair Jerome Powell on Thursday, lodging insults at the head of the central bank for opting again to not lower rates. Jerome Powell, too late. And he has done it again. He is too late and actually too angry, too stupid, too political to have the job of the federal chair, Trump wrote in a post on Truth Social. He's costing our country trillions of dollars in addition to one of the most incompetent or corrupt renovations of a building in history for construction. Put it another way, too late is a total loser and our country is paying the price, the president added. The nation's central bank on Wednesday kept short-term interest rates, which matter a lot for risk-on assets like crypto and stock market alike, at right around 4.25 to 4.5%. The vote included the first double dissent from Fed board officials in more than 30 years when Vice Chair of the Supervision, Michelle Bowman, and Board Governor Christopher Waller, who are both in the running for Trump's nomination to replace Powell when his term is up in May, voted to lower them. So there was 2 out of the 9 chairs that said we should lower rates. Our economy is ready for it. Trump's insult Thursday came after a fairly cordial meeting he had with Powell at the Federal Reserve headquarters last week to review the building's ongoing renovation. The Fed chair spoke highly of Trump's visit Wednesday, saying it was an honor to host the president. Just after the visit, Trump said there was no tension between him and the chair, as he rallied against for many years. So it's really interesting seeing the perspective and the things how they're precipitating between Donald Trump and the Federal Reserve Chair Jerome Powell. There was some rumors coming around that Jerome Powell was going to resign from his position, and we later got information that no, he's not going to resign. Remember, the market had only a 5 or 6% likelihood when it comes to poly markets and the predictive markets, saying that we were going to get a rate cut in July. We know there's no read in August, but we will have our next read in September. What's most crucial and critical when it comes to this read, guys, and I want you to guys look at the chart, look at the overall market actually. What we need to understand is the forward-looking statements that came from Jerome Powell, and the way he was speaking was inflation is still too high, it's still stubborn, and we don't want to rush into cutting rates. What we're getting, though, is the market is predicting at a 60% likelihood, more than half are predicting that we will begin seeing rate cuts in the month of September. So remember, the month of August, hopefully gives us clear runways as long as there's no evident black swans, which are, again, types of news catalysts that are negative. War breaking out, banks failing, something that is absolutely unaccounted for happens in the month of August. We could have some, again, tides against us. Even though Jerome Powell came with his hawkish remarks during yesterday's Federal Reserve meeting, the market held up nicely, making me think and believe that people are still predicting we will have rate cuts in September and hopefully maybe one or two more from there before end of year. As the federal funds rate reduces and goes down, more people are likely to deploy capital into more risk on assets instead of holding their money in high yield savings accounts. So, with that being said, I'm buckled up, I'm ready. And remember, XRP is the most inviting cryptocurrency to retail amongst the top 50 and even top, let's call it 10 cryptocurrencies between Bitcoin, Ethereum, Solana, BNB. Just remember, when a retail investor comes into the market for the first time, they'll see $3.09 per XRP. I'd rather hold a full XRP than a fraction of an ETH because I don't want to spend $3,700 on one coin. I don't want to spend $117,900 on one Bitcoin. I want to buy myself a $3 XRP and hope that it becomes the price of Bitcoin one day. That is the logic of new investors. Even though they don't understand market cap, they don't understand valuation, they don't understand revenue multipliers, nothing like that. So with that being said, the upside is still big. And you have Motley Fool, one of the retail investor favorites, saying, could XRP be the next Bitcoin? And they're saying with Bitcoin hovering around all-time highs, some crypto investors are surely looking for the next big opportunity. And they know because there's some significant retail demand that they have to continue to create articles, news pieces, and outlets for XRP. So with that being said, when they start saying, can it be the next Bitcoin, people are not looking at it from a market cap perspective, guys. They're saying, can XRP go from $3 to $120,000 per coin? And so, again, when a retail investor sees this for the first time, they're not going to educate themselves. They're not watching videos like this. They're not trying to understand what crypto is actually about. They just want to make some quick money. That is when the market is probably going to be in its euphoric state. We're talking very extreme greed entering the market as people think that crypto is free money. And that's when you and I, as people who've been studying, learning, educating ourselves, trading, being active, accumulating things like XRP and other cryptos, that's when we need to realize that, hey, the top is potentially soon, which we're still very far from it. I believe it's going to happen maybe Q4 or Q1 26, the local top, before we see a significant correction where new investors are going to be basically exit liquidity to the market. It happens every single cycle. It happened in 2017, and I was the product of exit liquidity because I thought, wow, crypto is free money. I'm going to keep buying and buying and buying. And then it dumped. And then I ended up selling for a loss because I was like, oh no, I don't want my money to go to zero. And that's when you and I will buy back in the dip that leaves retail behind. So hopefully we continue to educate ourselves. We are part of the retail base for investors. We're not institutions. But remember, institutions think like strong strategic investors. So we need to play it right. We need to be prepared, not surprised, because when they will panic, we will pounce. And when they are greedy, we will begin to take profits. I appreciate your support as always, guys. That's all I had for you today. And until next time, as always, everyone, keep investing. Peace.